Markets anticipating the Fed's next moves, and so far they've given no hints they'll let up on the fight against inflation. Here with a summary of what to watch, Yahoo Finance's Jennifer Schonberger. Hey Jen, a big week.
Good morning to you. That's right. A big week indeed. The Federal Reserve kicking off its first policy meeting of the year Tuesday, where it is widely expected to slow down the pace of rate hikes while looking at how much further it needs to raise rates ultimately this year after 3 months of slowing inflation. Here are 3 things to watch. Number 1, a 25 basis point rate hike. A chorus of Fed officials have signaled a quarter-point rate hike at this meeting, which would mark a further slowdown in pace from the 0.5 percentage point hike seen in December. Markets are pricing in a nearly 100% chance that this happens. That would bring the policy rate to a range of 4.5 to 4.75, marking the highest level since October 2007. The Fed wants to slow down the pace of rate hikes to assess the impact on the economy so far and see how much higher they need to raise the policy rate to continue bringing down inflation. Number 2, how much further will the policy rate rise, and when could the Fed pause? Read the Fed's statement closely and see whether they leave in language that, quote, ongoing increases in rates, emphasis on plural there, will be required. Also, listen to comments from Fed Chair Powell during the press conference, since there won't be any new interest rate projections this meeting. Most Fed officials estimated in December that the policy rate would need to rise to a peak between 5 and 5.25, implying about 2 more quarter-point increases. Number 3, what does Fed Chair Powell say about financial conditions? The Fed has said any easing in financial conditions will make it harder for them to do their job and could require further rate hikes. If you look at the yield on the 10-year Treasury and the level on the S&P, they're about roughly where they were mid-December, perhaps a hair higher when the Fed met last. Some officials have talked about the potential to raise rates even after the Fed pauses if financial conditions loosen or inflation remains high. Watch to see whether Fed Chair Powell will say the same thing. Now, Rochelle, I just want to point out one other major data point that Fed officials are closely watching tomorrow morning is the employment cost index. This is important because it is an indicator of wage growth, which they believe is feeding into inflation. Now, depending on where that number comes in, it probably won't change the calculus for a 25 basis point rate hike, but could have implications for how they see things going forward. Back to you.